Put on your Google glasses, tuck in your Google t-shirt, adjust your electronic Google belt, place your Google Android phone on hold, understand you will be a little late for your Google-approved snack, and join us as we once again delve into the reality of global life here in the 21st century. All approved by Google, of course. Welcome back from the Society to Advance Financial Education. Steve Beaman joins us today, obviously using some sort of a Google event or a Google device somewhere, are you not?
Absolutely am, and don't forget those Google auto drive cars.
Coming soon to a theater near you. Let's start this out. Google is now going to start a mobile network, so they're going to move now into mobile phones. I guess maybe this was just a normal progression, though, for Google, because they are becoming all about a communication company. But I can only imagine what this may do to some of the other phone companies out there.
I think it presents a real threat. What they're trying to do is intersect that data component of the phone together with the cellular network so that it's a seamless interaction, and that would be a very powerful competitor. Right now, a lot of the people watching today are used to their data running over each and every month because they have separate data and cellular. Well, this would combine it, so it eliminates that problem.
So what then do you think the answer back will be from the Verizons, AT&Ts, Sprints, and all the rest? Because it would seem that those are the companies that Google is eventually targeting here.
It's going to be tough. They're going to have to come up with partnerships with the cell networks and the data providers so that they do intersect ex-Google. You're going to have some strange bedfellows in this thing as it grows. And it may begin, believe it or not, to touch on the net neutrality regulations. We don't know to the extent that they're going to be that broad, but they could impact some of this cellular data as well.
Again, it's a Google world, and we just live in it. Okay, it is also a world for Warren Buffett to talk about banks. I found this interesting. Warren Buffett, this was his letter to the Berkshire Hathaway shareholders, called bankers, lawyers, and financial consultants, quote, a lot of mouths with expensive tastes, unquote, who only lure unsuspecting investors into a fool's game. Coming from Warren Buffett, I just find that sort of ironic.
Well, you can't argue with this man's success. Clearly, he's been a terrific investor in his life, but it does seem as he gets a little older here and a little toward his demise, he's trying to worry more about legacy than logic. I don't understand his bashing these people. Yes, we all know that investment bankers serve a specific purpose, but you don't need to bash on them. We have to remember also, Warren is in a political mode right now. His acquisition of Burlington Northern Rail was specifically a response to his desire to kill the Keystone Pipeline. So I think he's got political intentions, and there is an undercurrent to a lot of these letters he writes.
I think you might have said it, though, Steve. It's kind of like getting a little bit older, get off my lawn syndrome. I think it has to work sooner or later with everybody.
That's exactly right. And thankfully, we're a long way from that. So
thankfully. Yes, indeed, although the makeup certainly does wonders to make us seem like we're not. NASDAQ breaks through the $5,000 range. Huzzah. Everybody is partying in Wall Street. What exactly does this mean to the consumer?
Well, a couple things. First, it did give a little bit of that back today because you got auto sales numbers that were a little softer than people expected. The weather's contributing to a little slowdown, and obviously the Netanyahu speech is affecting the market. So we're back down below that record level. We have to understand the achievement of the 5,000 level this time around, contrary to 2000, was a very slow, steady rise. So it doesn't have the makings of a bubble as bad as it did in 2000, but it does speak directly to people having risk controls on their portfolios so they don't get caught in a trap should things turn south rapidly.
The Dow Jones Industrial Average has 30 members. Apple is not a member of it. What would happen and what would the Dow look like if it included Apple, Steve?
It would be significantly different. As people get their knowledge of financial instruments growing, they'll understand that these indexes have different ways they're structured. The Dow is a price-weighted index, meaning that for every dollar in price that you have over another company, you have more weight in the index. So a stock with the price of Apple would have an enormous weight on that index, and you might see it run up 400, 500 points just on the inclusion of Apple because Apple at such a high price has such a big impact on the index.
Speaking of enormous weight, hashtag National Pancake Day is trending today. Have you been out for your freebies?
No, but I've got a daughter coming home from school shortly, and I'm sure we're going to go do that.
This is actually nice. It is National Pancake Day, but it's all about raising money for charity in the end, correct?
It is. And the company that owns IHOP also owns Applebee's, and they're a very strong company. In fact, Kramer, who a lot of the CNBC fans watch, is a big fan of this company, Dine Equity. They've got some real strong business models. They're a very strong franchise. So this is good promotion for them, but it continues on really a promotional path they've been on for years that's built that company.
Head for IHOP, then. You get a short free stack of buttermilk pancakes, and if you're so inclined, leave a donation for Children's Miracle Network hospitals or other charities associated with IHOP. It's a nice idea. They're trying to raise $3.5 million. I am heading there right.
Let's help them do it, Ed, and people can watch their pancakes as they watch Newsmax.
Going right there, brother. Going right after the show. Matter of fact, I think I'm going in 30 seconds, but that's another story. Steve, thanks so much for joining us. We'll talk to you again real soon.
It's a pleasure, Ed.
All right, take care. When the issue of medical care comes up, all too often the first word is Obamacare. Hey, love it or hate it, still people in both sides of this argument being left out in the cold. But what about free clinics? We'll talk about that when we come back.